You were listening to chartingwealth.com for Wednesday, 14th of June, 2017. We see everything up for the day. Now, this should concern you somewhat. Everything's been down the last 2 days. Now everything is up going into the market on Wednesday. Markets are not supposed to operate that way. Gold and bonds are typically inversely correlated to stocks, but that is not what we're seeing in this crazy market. We see everything up for the day. The Q's up wildly high, up 0.81% for the day. S&P 500 up 0.49%. Gold up 0.10%, bonds barely up 0.02%. Let's jump first into the S&P 500 as we always do, as depicted by the exchange traded fund SPY. Now, of course, we had our weekly vertical crossover occur for the week ending the 2nd of June. We had our jumping in point that following Monday. The jumping in point was 244.06 at 10:30 a.m. If you chose to enter the market at that point, went as high during the week as 245.01, and then actually struggled throughout the course of the week. We had the new week open, was down to begin with on Monday, then moved up into the positive on Tuesday. The high was 244.61, closed at 243.66, still about 50 cents below what our entry point was. Everything is telling you things are looking better. Derivative oscillators gaining energy on the weekly chart, and we're seeing a slight pull away between the price percent oscillator and the red signal line. As we look at the 2-day chart, things look a little rosier as far as the PPO goes. It's ticked back, moving up again. We do see the derivative oscillator, however, is continuing to lose energy. We do have our first day of the 2-day candle is green, has moved above the 2-day trend line and still well above the weekly trend line. So we'll continue to keep an eye on things. When we get to that 4-hour chart, we haven't had that crossover going back up though. So again, those of you who did not get in or who pulled out once that crossover going down occurred on the 4-hour chart, still don't have enough energy to pull that over into the positive. And of course, once we start seeing some significant price appreciation, we will feel better. All we're really seeing, my friends, is everything slide sideways. We can see the high from the prior week when the vertical crossover occurred. The high was 244.30. The stocks did close. We can see, yes, we have our high being 244.60, and we had our last 244.33 or so. So again, we're just sliding sideways throughout the last week or so, and we want to see things appreciate significantly better before we feel good about it. That 4-hour chart crosses over going back up. You can sure consider jumping into this movement. Okay, let's go back to our weekly chart, and we will take a look at the Qs. The Qs, like I said, up 0.81% for the day. You don't see a lot on the new candle. Why? Because there was such a drop-off that occurred. And in fact, we are continuing to see depression in the derivative oscillator and the PPO. The price percent oscillator is heading down on that weekly chart still, even with the up day. When we look at again, we're looking at Heiken Ashi candlesticks, our newest 2-day candle. We're still seeing downward movement on that. And of course, we had that 2-day vertical crossover going down on the candle ending on Monday, the 12th. Derivative oscillators continuing to gain downward energy. And we're seeing the PPO move down. As we tune intraday, we see on that 4-hour chart, we do see where the appreciation occurred. Saw some up movement in the morning and some later in the afternoon, but from the starting point moving down on that 2-day candle that ended on Monday the 12th, we've not even reached that yet. So again, nothing telling us anything super positive. We don't have a crossover going up on that 4-hour chart. If indeed that occurs again, then of course what we have to see also is this 2-day chart rotate back over going up to parallel the up movement in the weekly chart. So we don't have that. It may be coming soon, but I'm not going to hold my breath on that happening on the Qs at this point. So again, we had wonderful appreciation in the Qs. Things were great. We haven't had the weekly crossover going down yet, but the 2-day crossover going down took away our trade at that point. So again, we'll continue to watch and see what happens as things move along. Let's take a look at TLT. That is the 20-year bond fund. It was up just a little bit for the day, 0.02%. Of course, it broke through at the beginning of the week, broke through the weekly trend line. The weekly chart, however, is still going up. When we look at our 2-day chart, we can see that it has not crossed over going down yet, but there are significant downward pressures on the candles. They've not pushed through the weekly. Of course, they already pushed through several days ago the 2-day trend line. As we look at the 4-hour chart, we see that it's continuing to move down until that crosses over going up. We don't have a resumption of a trade on TLT. But keep your eye on that. If that chart crosses over going up, we have some more good positive days. Since the weekly and the 2-day are going up, you may have the entry of a trade possible. So we'll keep an eye on that. What's gold up to? Gold was up not a whole lot, 0.1% for the day. Still in a confirmed up move on the weekly chart since the PPO, the price percent oscillator, is moving up. We do see just a fraction of an increase in the derivative oscillators energy going up. We, of course, have violated the weekly trend line when the market opened for the week since it was down so low on gold. As we look at that 2-day chart, what do we see? Well, it, of course, is getting closer to crossing over going down. Hasn't done that yet. Again, if that 4-hour chart turns around, it might still save an up trade in gold for us at some point. Let's take a look at that prescient 4-hour chart. Still moving down. However, during the course of the afternoon, has it bottomed? We don't know, at 120.09 or so. We'll keep an eye on things. Derivative oscillator started losing some of its downward energy, but we have a spinning green top, which basically means indecision, almost a doji there. So again, we'll just see what happens. Again, we are not close to crossing over as far as the PPO goes. So we'll continue probably to see downward movement, but we will keep an eye on things on gold. That is where we are, folks, at the end of the day on Tuesday, the 13th of June, as we go into Wednesday, the 14th. We have received all of the emails from the folks that are interested in our quarterly training. The folks who have not been approved, those emails have been sent out. If you've not gotten an email saying you weren't approved, then you can consider yourself approved. We're working on that training over the next few days. Should be getting that out to you in a week or so. That is the SPY quarterly training for that incredible chart that we have on how to use our quarterly chart to help you in training to make long-term decisions for long-term investing. And we have, of course, hundreds of people signed up, both long-term investors and financial advisors. Again, just the caveat for those who will be taking that training, it is not investment advice. We are simply an education firm. We're not telling you what to do with your money, but we will be sharing those very vital and important charts and how to use that quarterly chart, which is just amazing. If you've not already signed up for our newsletter in order to participate in any of the things that we do here at Charting Wealth, you have to be a subscriber. We do have a great new training that's going to be coming out after we do the training on the SPY quarterly chart. In fact, I'll give you a little taste of it for those who have not seen it yet. It is our special chart on Bitcoin. We just love the Bitcoin chart. It is amazing as Bitcoin started to lose some energy over the course of the last day. We can see those things reflected on our chart. It is a great chart. It uses a true strength index rather than the PPO and the derivative oscillator that we didn't find worked so well for us on Bitcoin, but we did find that that true strength index did. You have to be a subscriber in order to receive that training. And again, you just go to chartingwealth.com, sign up for free. We're not asking you to pay anything. You just need to put in your email address and your first name. We don't share any of your information with anyone. Those who've been with us long term, you know we take that very seriously. And we love to hear from you. You have questions, problems, concerns, issues, you can always email us, cw@chartingwealth.com. We're here for the folks who subscribe to us. And again, no charge for that. We are happy to help you. Remember, we're an education firm. We're not a stock calling service. We want you to train with us. We want you to use all the information that we have available. And you're not going to get all of that until you subscribe. And with that subscription, you're going to get our How to Read a Stock Chart video. You're going to get the layout, the parameters, and a complete setup that we use at freestockcharts.com. In addition to the PDFs on our trade worksheet, so you can track your trades, our daily market worksheet, and our weekly market worksheet. If you want to supercharge your training, this is the way you do it, because I'm telling you, you need to be able to read these stock charts. And once you're able to read them, hey, the world is your oyster. God bless. All the best from chartingwealth.com.